What is going on, traders? So Tesla's stock price is up 37% in the last 4 months. It is clearly gaining momentum here, even though it has been rather lackluster in 2021, only gaining 4% versus the S&P 500, which alone gained 22% this year. However, with Tesla's recent momentum spurred by some of the highlights from AI Day, the fact that full service driving beta version 10 might be due out for release by the end of September, and our favorite aunt and my baby mama, Cathie Wood, recently reiterating her $3,000 price target, folks are asking the question whether Tesla is on its way to becoming a four-figure stock, meaning $1,000. So in this video, I'll take you through some of the fundamentals, financials, and we'll take a look at the technical chart as well and see if the setup supports a $1,000 price target in the midterm. So if you are interested in Tesla and or investing and or financial analysis, you definitely want to stick around till the end. If you get anything out of this video, leave it a big fat thumbs up just like this. Let us get right into it. So why is Tesla's stock price gaining momentum? As I said, it is up a whopping 37% since the low that we saw in May. Well, as always, there are a few factors and reasons for this. It's never just one thing. From a technical setup, Tesla fell to major support that we haven't seen since December 2020. Tesla's AI Day, which it hosted last month, was seen overwhelmingly as a success. They debuted some kind of weird humanoid robot, but more importantly, they gave an update on Tesla's in-house computer chip, which they are vertically integrating and designing completely in-house. Now, obviously, you can look up the highlights and details of AI Day on your own, but the reasons for this in summary are twofold. One, better integration and less latency, meaning if they are designing the chips in-house and they're also writing the code, the testing is quicker, right, between the hardware and software, and also the synergy is more productive. And two, the world is reeling from a chip shortage, so in order to compensate for supply chain constriction, they thought that designing their own chips in-house might be better for the future, which allows them to become more independent. And more importantly, they got the world excited again on FSD, which is full self-driving. Elon Musk tweeted that FSD version 10 will be up for beta release by the end of September. And as we mentioned earlier, ARK Invest reiterated that $3,000 is their base long-term target for Tesla. Furthermore, there was also this supposedly leaked email from Elon Musk to his employees saying, if we execute really well, I agree with ARK Invest. Now, whether this is true or not, I'm not sure. I cannot confirm this. However, if it is true, then it is likely seen as a move to give a morale boost to his employees. Obviously, if you own shares in the company, you want the stock price to be four figures, and especially Crazy Cathie's $3,000 price target. Now, before I jump into the financials, I just want to state that this is where technicals and the news are sometimes aligned. When you see a stock trading in a tight range, in this case, Tesla's been really trading between 600 and 700, give or take, going all the way back to March. So when you see Tesla's stock price trading within a range, and then we see a flood of news, that tends to boost momentum. And then the more that people pour into the stock, the more that momentum starts to develop. It's like a snowball rolling down a hill. Okay, so looking at the financials and fundamentals, is there actually a solid reason for Tesla potentially hitting that four-figure mark in the midterm? Let us take a look. If we take a look at the street's mean consensus estimates for Tesla's revenue, you could see that year on year, forward year 2021 through 2025, Tesla's revenue is expected to grow, reaching to about $120.4 billion by 2025. Now, it's not just the revenues, but their earnings in the form of EBIT and EBITDA are expected to grow as well. Now, if we compare Tesla to some of its benchmark peers, as well as Adobe, I'm not sure why Adobe's in here. By the way, this is from a Seeking Alpha article that I will post a link to in the description. I'm not sure that if you can access it if you don't have a Seeking Alpha account, but I'll just post it anyway. However, if we take a look at it compared to these benchmark companies, you'll see that Tesla is in great territory here. 5-year forward CAGR growth, 56%, 10-year forward CAGR growth, 41%. And just for comparison, a growth company like Adobe, it's projected to be at 22% and 13.8% respectively. And if we take a look at it compared to NIO, we don't even have numbers for their CAGR growth, but GM, BYD, and Volkswagen, you can see that Tesla is well ahead of these three car companies. Not only that, but Tesla is impressively able to improve its EBIT profit margin. If you take a look here, 5-year forward average 13.1%, 10-year forward average 15.7%, much better margins than those of GM, BYD, and Volkswagen, not competing with Adobe here. Now, if we take a look at Tesla's trading multiples, right off the bat, it does seem rather high. Its EV over forward EBIT is 86.6 compared to 12.3 for Volkswagen, 61.6 for BYD, 11 for GM, and NIO doesn't even register because it's negative. It definitely seems kind of high. However, we have to contextualize this a bit. So if you compare Tesla to some other growth companies, mainly Zoom, Palantir, Now, etc., you could see that its EV over forward EBIT multiple is actually pretty in line with some of these hyper growth companies that are expected to have better margins and significant EBIT growth over the next couple of years. So if we run these numbers through a fair value computation using a multiple of 57x, 60x, and 63x for the EV/forward EBIT multiple, you can see that in the low case, we get a fair value for Tesla's stock price at 677, the mid is 712, and the high 748. Tesla's currently trading at 752 at the time of this recording, so it is in line with that high estimate. Now, lastly, we will round it off by looking at the chart and seeing if we can marry the fundamentals and technicals to come up with a solid conclusion on whether Tesla's stock price does support a four-figure price point or not. So looking at this, we are right in the bulk of the volume here. This on the right is called volume profile visible range. Basically, it just tells you at which price point there is a lot of volume or where the bulk of the volume is traded for Tesla. And we can see here that 752 is definitely on the upper band of this wide range. So here's my thought on this in the midterm. The stock is going to need a lot more than fundamentals to drive it higher than where it is currently. Now, we do have something called momentum, and momentum can absolutely destroy any fundamentals and technicals that you have in place. So what could drive momentum? Well, like anything, you need a catalyst or a set of catalysts to spark a price rally, and then you get the FOMO buyers and the MOMO buyers coming in to drive the price higher. As you can see here, there was a time when there was a lot of volume traded between the low 800s and $900 for Tesla. So if full self-driving beta 10 is actually released within September, and we can actually see the light at the end of the tunnel to take us to autonomous level 3 driving, which doesn't require that much human intervention, then I can easily see the market start to price in things that rely on level 5 autonomy in the future, such as robotaxi, etc. The market already started pricing this stuff in, and then when they realized that we are probably further away from full self-driving than we are currently, investors started taking profits, and we found ourselves in the $600 to $700 range. So there needs to be a catalyst or set of catalysts that then trigger the market and excite the market about some of these developments that could generate revenues beyond what we went through in the financial analysis. Because if we get level 5 autonomy, if we get robotaxi, if we get car sharing, then all of a sudden those revenue figures start to look very different than what we are currently projecting. And that is probably what ARK and Cathie would have in mind. They are already pricing this stuff in because they're expecting these features to be rolled out, where the broader market of Tesla investors are probably a little more passive and a little less optimistic about that stuff, and they would rather hear some of these catalysts come out before dumping in more money in Tesla stock. As for us, in terms of trading it, anytime that Tesla gets to major support, what we do is sell cash secured puts. These are options that basically allow you to name your own price. So when Tesla drops below 600, we sell the 450 cash secured put. And if we get assigned, then we will be obligated to buy 100 shares of Tesla at 450. And we also get paid to sell that put. It seems like cheating, but a lot of what we do in options does seem like cheating anyway. So if you want access to all of our trades, link is in the description below. There's also an options course that I spent 100 hours putting together. That link is also in the description. But I do think that Tesla right now trading at 750 is right around where the upper limit is for Tesla in the midterm, obviously not in the long term, until we can get some of these catalysts released. If FSD version 10 is released, and again, we could see the daylight on level 3 autonomy, let alone level 5 autonomy, then we could see Tesla start to inch towards that 4-figure mark, because it will change the revenue spectrum for the long term. Hopefully you got something out of this video. If you did, leave it a big fat thumbs up. Leave it in the comment section below. Let me know what your price target is on Tesla and whether you own Tesla in your portfolio or are planning on getting in. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.